Two listings on the JSE this week, Life Healthcare, which has pushed its listing back to Thursday, and RCM and Calibre, which list today. RCM and Calibre is a joint venture investment company between Regarding Capital Management and Calibre. Joining me with more is Theunis de Bruyn. He's Executive Director at RCM. Theunis, good afternoon.
Hi, Stephen.
Well, Theunis, you're at the JSE now. How has this listing gone?
Well, I think it's gone very well, considering the markets over the last month or two. I think when you look at what we've been through with the markets, it's been very difficult. It's really been an act of faith from our side to get this amount of capital together. We fully subscribed, and we're very excited about it.
Theunis, did you consider postponing the listing until markets had settled a little bit, or were you set on listing today?
Not at all, Stephen. We are taking a 50-year view here. We're raising capital for a very long term. We're raising cash. As we sit here today, there's 500 million rand in the bank. So we're not trying to sell anything to anybody. It's purely a capital raising, cash in the bank, and from here onwards we will see what investment opportunities we can pursue with this money. Well,
just looking at the money, you raised 450 million from the listing, both joint venture partners also contributing 25 million each, so you've got some skin in the game as well. Why did you go with the preference share route for the listing?
I think it's very important. It gave us two things that we required, and first of all, it is the fact that we got control of this vehicle, and secondly, that we got an investment mandate from our investors so that we can pursue a very long-term strategy without have to go back to the market all the time, getting approval for whatever we need to do. So this is an act of faith from our fellow investors with us. Our money is on the table, their money is on the table, and on that basis, we are looking after the money, we are pursuing all the investments on their behalf, and we feel very strongly that one cannot manage an investment business by committee, if I can put it that way. And it's for that reason that we went the pref share route.
Who are your investors, Theunis?
I would say roughly 70 to 80% of them are fellow fund managers that share our long-term value investing view, and the rest of them are high net worth private individuals, many of them clients of RCM, our asset management business.
Now, why would you buy pref shares in the listed vehicle rather than just giving RCM the money to manage on their behalf? What's the benefit?
Yeah, I think that's a very important question, and that's partly the reason for us raising the capital for this business. Is if you take somebody like RCM, they are regulated in the sense from pension funds, from unit trust, and so forth. And typically, if I can give you a few examples that they could not invest in, is if somebody approached them on this JSE and asked them to buy 30 or 40% of their business. Being a pension fund manager or unit trust, they're not allowed to do that. A second example being, let's say you've got a small business that you find very attractive, but you cannot buy a stake in the business because you need to buy the shares for all your clients. And where in this case you can then go ahead and buy it. So on that basis, there's quite a few examples where we see opportunity to invest in that somebody like RCM is not allowed to do for their clients. And clearly, if they're not allowed to, so are all the other large fund managers, and therefore there's not a lot of capital pursuing those opportunities. So we believe that we could get assets at very attractive prices through this vehicle.
Okay, so you're saying with this preference share capital, you can go into unregulated vehicles that you wouldn't be able to as a fund manager, and they would fall under the Financial Services Board regulations. Is that right?
Well, I'm saying we could pursue investment opportunities, as an example, on the JSE that they would not be able to do. And another example is where Calibre Capital comes in from a private equity perspective or unlisted environment. As you know, unit trust may not invest in unlisted equity, whereas this vehicle will be able to do so. That's another classic example.
Of course, we have seen increased volatility over the past few weeks and months on the markets, but as you said, you're taking a very long-term view here. What sorts of investments are you looking for, both listed and unlisted, on the behalf of Calibre?
Well, from an unlisted perspective, I would say that we would continue to do what we've done over the last 7-8 years, and I think that the set of rules is very similar to that of RCM. We buy good companies at very attractive prices. It's as simple as that. Whether they're listed or unlisted, it does not matter.
Your views on the markets at the moment, Theunis? I presume you have a view on where we are going from here, because we are seeing this volatility. We're seeing a massive uncertainty, particularly coming through from the European Union. Where do you see this market going?
As you know, our view at RCM is we don't know. It's not important for us. We worry about where value will be in 10 years' time. So times like this always creates opportunities, so this excites us. Volatility, negative sentiment, that's good. That's what we like.
Well, perhaps you said you take a longer-term view, perhaps just going back to the beginning. So you've been in existence for 7 years. What sort of wealth have you created for customers? What sort of track record has RCM built up in this market?
Well, RCM has done very well for their clients. You can look at the ranking tables. They're a top-tier fund manager. And I think it's our whole philosophy of saying your capital first. We've made the conscious decision to be a small asset manager so that we can invest into a wider spectrum of assets which the large asset managers cannot do. And there are many other examples of what we do to make sure that our clients come first, that their capital comes first, because we are fellow investors with them. Our own capital are invested alongside them, so we are here for the long term. That is how you make good investment returns, is buying great businesses at sensible prices and waiting for a long time.